Yeah, well, good morning and thanks for having me. I think the first reaction here is that investors should get ready for a wild ride in FX volatility. I think it's going to be, as we go into 2025 and the months ahead, we are going to see some of these back and forth in currencies. You mentioned the dollar was down 0.6 of a percentage point yesterday. It's up 1% and more today. I think this is going to be something that we all have to get used to. It's going to be volatile moves in FX markets because currencies are to some extent the primary means of responding to any sort of tariff announcement. They are the primary economic mechanism that tends to react. So I think that that's the first thing to say, that I think volatility is going to be with us. We need to be ready for that. We need to strap in for that.
So is it here with us for now, for the long run? What's the timeline here?
I think it's here with us for the long run. I think that we are going, our expectation is tariffs are going to be a prominent part of the policy mix of the new administration. I think there are questions you can have about, is it a negotiating tool? Is it not? Are these maximalist positions or not? Is it priced in or not? I think all these are relevant questions, relevant discussions to have. But I do think at the end of the day, we are going to see an increase in tariffs on a number of economies, primarily China. And I think that is going to elicit a stronger dollar response on a broad basis.
What sort of level are you thinking in terms of dollar strength? For how much can we see the dollar index going up by in the next 12 months, really?
Look, I think under our baseline scenario that, President Trump and the incoming administration imposes, additional tariffs on China, potentially tariffs also on, autos. We have something like 2 to 3 percentage point increase in the broad dollar index. But I think we need to be aware that that is just the baseline scenario. I think that throughout the campaign, throughout, previous statements, there have been talks about across the board tariffs on a wider range of countries, Mexico, Canada, for example, mentioned overnight. So I think that once you start factoring in the risks that this is not just about China, but this could be across the board, I think you need to factor in, potentially even further upside in the broad dollar, even further downside in key currencies like the euro, and Canada and Mexican peso amongst the key, constituents of the trade weighted index.
Give us a little bit more color on that, because when you look at the detail in terms of new tariffs for China, the number we obtained yesterday is much smaller from what Donald Trump had said during the campaign trail. So given what you just told me, is there perhaps here for more pressure on other currencies that it's not the Chinese yuan?
I think there is some possibility of that from two perspectives, I think. So first is that, I don't speak to anybody who doesn't expect tariffs on China, right? So I think that tariffs on China are widely expected. But also, to some extent, China has the room to respond, whether it is through fiscal policy, whether it is through actually, maintaining a low wall regime in the currency space. And when you think about the differences relative to the first trade wars in 2017, 2018, China makes up a smaller share overall of U.S. imports compared to some of these other countries that you mentioned. So I think there is a risk that actually, the weakness that you see in the renminbi or the CNY is more controlled than the volatility and the weakness you see in some of these other currencies, which could, be caught within the trade war net. And I think it's important that it's not just if they are targets, but even if they're discussed, like we saw yesterday. I think the details will matter here. What is the exact level of the tariffs? What are the conditions? When do they come off? Are they temporary? Are they permanent? I think all of these things we will have to see when it comes about.
So what kind of currencies could be the biggest losers here?
So I think certainly, we have to think about the Mexican peso. They have a large exposure. But again, I think ultimately we think it's going to be in the interest of both the U.S. and the Mexico to reach an agreement on the border. There was also some of that content in the tweet that you saw, or the comment that you saw yesterday. But I think other currencies, things like the euro, I think, for example, where there is less room to respond on the fiscal side, and the only response is likely to be from the ECB lowering rates even further in what is already a pretty soggy economic picture. I think you could see more downside there. In places like Asia, like Korean won, for example, another place where we haven't priced in a lot of tariff risk, you could see more downside there if those other open economies in Asia start to get commented on.